Hey, Alpha Fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the massive breakout that Bitcoin has had on the Bitcoin chart. That 1 year downtrend has now officially been broken. And so, the crypto community is celebrating as we see an opportunity to move on to a potentially new, perhaps more bullish era. Of course, there is likely to be a continuation of a bear market, and an accumulation period would probably still take a while before the economy recovers enough for a proper bull market. But at the same time, this means that we're in a much stronger position than if we were just trapped under that macro downtrend. And as you can see, coins are just celebrating left and right with winners across the board, and profit taking actually in some of the others after having perhaps front run the move. Let's go ahead and take a look at stocks. Now this is what you call a green day, guys. I mean, this is just a beautiful bouquet of just green. It's nothing else. There's no red on this chart. I don't know, maybe a little bit here in this real estate healthcare facilities, but otherwise, the market is celebrating a little bit of a bounce today, with Apple again up almost 3%, and the tech sector having healthy gains, Nvidia 5%. So, this is nothing to sneeze at. The community of traders as a whole are celebrating the bounce, and you can see that expressed across the globe as well. And the reason for this, of course, is that the dollar has had a little bit of weakness to it. And if we go ahead and just take a look at the dollar chart, you can see that, in fact, that quadruple resistance area that I had been plotting out for all these months, right? These months and these months and these months. Whereas some guys were saying, like, parabolic, curves, like, they don't matter. Well, guess what? As soon as we broke down from it, we clawed our way back up. We basically retested it at our resistance lines, and now we're breaking down yet again from this point. Are we going to go sideways and start a new era of growth? Probably. But guys, what did I mention about the dollar? That China was threatening to sell their dollars, or a good portion of them anyway, in order to chop up and, prop up their own currency, the yuan, right? And so, China has two currencies, the renminbi and then also the yuan. And the yuan is what they use internationally, and the renminbi is what they use domestically, but they are pretty tightly related. And the renminbi and some of these other currencies that China uses were in a state of free fall. And so, part of what made the global, markets so skittish about the pound, the British pound, was that Chinese traders were actually playing a game between the British currency, the sterling, and also the yuan and the renminbi, and that put an enormous pressure on the British pound, which of course could not accept all of that volume from China, as the Chinese were essentially fleeing their own currency and having some flight from the yuan. So, guys, you do see a little bit more stability in the British pound now that that volume is ceasing. Even the threat of China selling its dollars, and I'm not sure if they've started or not, but even the threat of it is enough to bring the dollar market down a bit, soften it a bit. allowing us to have these bounces on the charts. And so, where might we suggest that the dollar could go? Well, it's been dropping pretty fast. And if you look at, the way that the dollar behaves, it does seem to have this trend line that I've had marked out here. And, you probably haven't really noticed it, but if you can just take a look, you can see this trend line. It's more or less the higher lows were part of this, kind of parabolic growth curve, which I have marked out here in teal. But then we did start to just tag back to this uptrend here, and so I did have it on the chart. And I would suggest that if we do have a pullback, that at least on the 4 hour here, we are starting to cross the 200. And every time we have a pullback, we break through that. And then we basically come back down to this dashed line in the recent touches. So I would suggest that this is our first obvious area of interest when we're considering where we might get a little bit of a bounce next time, if not off of the 200 itself on the 4 hour, probably just a little bit of a hiccup. We're probably having that right now, actually. And then probably continuation to the downside, allowing markets to continue to push up until solidly bouncing off of this dashed white line somewhere around here. So, yep. Congratulations, Alpha Fam. Like, we played that dollar play extremely well. So just a boom on that one. And we are going to be looking for this area of interest for a possible turnaround. And if we're able to break through that area, then we would probably be looking more for the support line down here, okay? Just for some type of major check back. Let's see what that would look like on the daily. And yeah, that would be confluent with the 200 on the daily. And so that should likely give us some support on the US dollar as it marches down if we do end up breaking this trend line, as the 200 is fairly significant to most technical traders. And of course, currencies do trade quite technically. Guys, let's go ahead and check the VIX. And what was I saying about the VIX? That it had this kind of janky head and shoulders on it, doing a little bit of a fake out thing. It didn't really violate the shoulder, so still holding some validity there. And then it is working its way down. Now, there is a measured move to that head and shoulders, which could bring us into this area down here. Let me just double check that. And yeah, approximately, it probably could tighten that up just a little bit to be conservative. Get that somewhere on the neckline, and then that would also bring the VIX down to the 200 on its 4 hour chart. What would that look like on the daily? That would be approximately the 50 on the daily, which we can see it does check back every once in a while. So that's not out of the ordinary. If it did wick a little bit further, that would also be the 200 on the daily. And so again, it looks like if the dollar and the VIX continue to squeeze down, then they're likely to be targeting either these, kind of 50, 89 areas, or perhaps the kind of 89, kind of 200 area on their charts, which would allow for nice trading. I think that we are getting beyond the region of just being, bearish skeptics, and we do have to take our trades, which I'll show you more on the Bitcoin chart and on the stock market a bit later. But let's go ahead and check out our third risk factor here, which was, of course, the USDT dominance. And as you can see, USDT just continues to play in my little expanding wedge up here, which I suggested that it was likely to just be bouncing around like ping pong. I've mentioned that for several episodes that I just expected it to bounce around like ping pong, and it's continuing to do so. It is it is finding a little bit of support on this green line here. So the market still a little bit reluctant to be risk on understandable. People are leaving markets, they are not entering markets. And so, being one of the most risk on asset classes, and then also the fact that we have a recession, it's understandable that money wouldn't initially flow into crypto. It would be, of course, the institutions and the investors, the VCs who are, big time, and the billionaires, guys who can like really calculate outcomes and they don't have to use their money. But in terms of the mom and pops and the little guy, the Joe Schmo just working to get by, these guys aren't going to have extra money to put into crypto at the time. Being they've probably lost a lot of money in crypto, to be honest, just by entering late in the last cycle, and so maybe a little bit burned on it. And so it could take a while until some type of a bull run really activates on crypto. But if we break down to these lower areas, then we could see the possibility for some type of a bounce off of the mid channel, and that would be in line with this 200. And in doing so, we might actually form some type of broadening, ascending wedge, or some type of, head and shoulder type structure down here. So we might be able to front run that type of thinking if we do see some type of a pattern forming, because of course crypto trades almost as technically as foreign exchange, but just a little bit more reluctant due to the risk factor. Guys, those are the risk factors. You can see they're all pretty much coming down. Tether just sort of sitting on this resistance line, a little bit hung up. The VIX just bouncing a little bit. The DXY just taking a little bit of an inflection. As you can see, it has a naked candle above it because it fell so hard. And so there might be a little bit of a check back, a little bit of a pullback on the charts, but overall, we're having a green day because these risk factors that I taught you guys to look for are coming down. And I hope that the Alpha Fam is using these tools that I've been trying to teach you about, because it's really important to just check these three things when you just when you just get to your charts. Just go ahead, open up the DXY, open up the VIX, open up USDT dominance, and just check. Do these things look like they're going to be pointed up, or are they going to be pointed down? If these three agree that they're going to be pointed more or less in the down direction, or they're trending down, then probably you're going to be having good trading conditions, because these are the risk factors that kind of make the market apprehensive, right? And then if these things are pointed up, if the DXY, the VIX, and USDT dominance are pointed in an up direction, and they all agree they're kind of trending up, they're pushing up, then you can say, hey, this might be a bit of a red day. It might be a bit of a bear today. So I might want to sit that one out, or I might want to just consider shorts. And so, guys, that's what I'm trying to teach you, so that you can do this stuff yourself and you're not dependent on me analyzing these charts. Although I love to have you join me, that's not really what I'm here for. I'm here to improve my own trading. And then if any friends or family want to join me on that journey, then of course they are welcome. But I'm trying to be an educator, not a shill or anything like that. I'm not trying to push any coins on you, just try to improve us all. But guys, use that little trick, because if for the last couple days, if you had been paying attention, that I was saying the DXY is topping out, the VIX is breaking back down into this it's getting out of that not good for trading area, and it's breaking back down into this neutral area. And if I was saying that the USDT was just bouncing between these two levels and it was on a downturn, then you could make the decision for yourself that, hey, this day looked pretty good, I should get in. And if we jump over to Bitcoin, you can take a look at, of course, our macro perspective, and you can say, well, we've already come down like 70% or whatnot, and so probably I don't have to be too afraid of the downside. Of course, we have been analyzing things like the good old alpha channels, and alpha origin channels, and then also just so many different factors that we have just been reviewing to suggest that, under $20,000 is probably a good point for your first DCAs. And while I don't really endorse DCAs, I don't want to give any type of financial advice to anybody. I mean, the fact is that as a relative value, anything under right, anything under 20,000, our previous market all-time high, was probably going to be a good DCA point, at least for part of your portfolio. And the concern that I had, which I mentioned quite clearly, is that some people are just gamblers, just degenerate gamblers who act like alcoholics. They enter on pumps right at macro resistance, and they go all in with all of their portfolio, and that ends up just getting them wrecked, right? And so what we want to do is be very mindful that we're buying at support, and Bitcoin did have this beautiful kind of double bottom, that it had put in on the macro. It had this bullish divergence, and so buying in at these areas down here wasn't the worst decision to make. Better if you had bought in over here with the Alpha Fam when we were buying in to this market, because of course this one could continue to dump, and so we took our profit on the move that people are looking forward to right now, who are entering late on this. Like, we already took our profits on that move on right here, okay, guys? And so if we take a look at the structure that we have on the chart, of course we do have this macro downtrend, right? And so that macro downtrend really is nothing to sneeze at, guys. And so as we've been rejected just time and time and time and time and time and time again, we just have just been smacked down incredibly hard. And so buying right here, right before the breakout, that's a tough pill to swallow, because every time somebody has tried to do that, they have just been smacked down. And so statistically, right, and for the right reasons, for the right concerns, we should not be taking that play if we have principles in our trading. Do not buy at resistance. This red zone is a resistance zone, and it's the most important resistance zone on Bitcoin's chart. It's the most powerful resistance zone on Bitcoin's chart. And so, if you had FOMO'd in here, just like some people are FOMOing in right here, they just got smacked down really hard. And that was a high likelihood, a very, very high statistical likelihood that that would happen again. Now, as it happens, we did have a little bit of a fake out where this suggested that it was going to break down and lose this kind of median radial that we have going on here, where the price just snakes around the Bitcoin medium radial here, which just kind of defines the center of gravity to all the price action. And so it's an extremely significant line. And as Bitcoin was threatening to lose it right here, that put the risk at an extreme high, because the potential downside was enormous. Okay, that's all the way down to 10,000 bucks. It's all the way down to 16,000 bucks, at least 17,500 conservatively. Okay, like, there was a huge downside on this one, and the upside was very limited because of this resistance zone, which could have been rejected before the box. It could be rejected at the yellow line. And so this thing could have just slammed you guys down if anyone was FOMOing in here. And so that's why I say, guys, don't buy at resistance. Overall, yes, you may win on one play, but overall, you're going to lose if you buy at resistance. What you'd rather do is buy at support, and we had a nice support here. And I guess technically you could have bought on this bounce off of this line. It's just within that resistance zone, so that is in fact resistance and support overlapping, which is weird, right? That's why we had that high volatility. that is just screaming on the charts, right? The volatility is just screaming because basically support and resistance had been compressed together and something had to give, right? Well, what we found out is that it gave way to the upside, and since volatility is direction neutral, you can't predict that. The market will take it in its own direction. There are factors such as the DXY and the stochastic momentum, and then all of these other things that we can measure to suggest a bias to one side or another. And yes, the biases were in the favor of the upside, but if we had been under that median radial, which we were temporarily, then we easily could have been squeezed to the downside. And I'll show you with our EMAs what that looked like, where let's see if I can get rid of the drawings, where our price action was actually squeezing to the upside, right? We even had these wicks all the way up here squeezing to the upside, and then we suddenly lost it. We lost the squeeze right here, and that was a very dangerous point where we could have squeezed down, sort of like this, guys. You see this move? This thing could have gone bigly down, okay? Like this thing could have actually capitulated in that type of a structure. So when I was conservative in this area on this candle, it was really to protect everyone in this community and also to protect my own assets that, of course, we've been working so hard to build up. And then, of course, the market makers took advantage of that to push us in the other direction. And that's why I call that a kind of a fake out, because we did lose our EMA structure, and we also flirted with breaking the medium radial there. So, guys, we did get this pump. It did travel through that resistance zone. This pump right here and this pump right here were basically practice to get us into that red zone. Whenever you break into the red zone, you can swim to the other side, right? And so we've seen this many times before. And so this movement just swam through it, all of that stuff. You can see that was pretty standard fare, guys. Like this could be expected that we could swim here. What wasn't expected is that we would have the energy to break out, and in fact, we have broken out. You can see that we're doing a little bit of a retracement here, and so as we close this candle, we're going to have to confirm, basically this week whether or not we're getting support at the top of the breakout. In other words, if this resistance is going to be flipped into support, right? And if that happens, then we have resistance has been turned into macro support, and that could be quite interesting, guys. Okay, that could be quite interesting. But as it happens, but as it is right now, we don't have a confirmation that this is a valid move. We do have candle closures above that line on the 4 hour, a couple 4 hour candle closures, which is a very good sign. But um, I would like to get a daily candle fully closed above that, and the reason is that we have this naked candle, which could actually bring us back into the downtrend. And so we do have a little bit of a naked candle exposure down here at 19,400-ish, and we also have as low as 19,700-ish, which could bring us back into our macro downtrend. So until we make this area into support, let's say if we hold on to 19,900, then I will be accepting of this move. I will take it at face value. I will say the squeeze is still on. But if we do try to fill these naked candles, then I'm going to be a bit concerned that we're going to get locked down into this downtrend once again. And if the dollar, right, if the dollar ends up being in that zone, which we had marked out for possible turnaround, when that happens, when the hypothetical situation where Bitcoin breaks back down into its macro downtrend and the dollar has already maxed out this area, then the most likely thing for the dollar would be to pump up. And so that's going to be a very risky play, because if the dollar pumps up, this entire move, right, or worse, goes into a new level, then that could be very dangerous for Bitcoin. As long as the dollar's coming down, though, I'm going to take it at face value. If the dollar starts reaching support, either this green line or this dashed line, or both, and starts getting a little bounce off of it, I'm going to be very concerned. If we can break through this area, right? This is our area of interest here. If we can break through this area, then I'm going to definitely 100% be playing crypto quite strongly, because most likely we're going to come back down to these much lower areas, and I think markets will just celebrate that enormously. Guys, I am spending a lot of time to talk about that macro stuff, just because, well, that is kind of a focus of this channel, but also I just want you to be aware that fake outs don't only happen to the downside, they also happen to the upside, and we do have to very mindfully be aware that we could be limited in some way in this area and come back down, depending on what happens, especially with the dollar. Okay, and global economics will trump anything that's happening on the Bitcoin chart. Let's go ahead and check out our key levels to watch, because, of course, that's probably what most of you guys are here for. Let's go ahead and put on our momentum zones. So just in terms of our momentum, I just want to say that we are well above our momentum zone on the daily. Let me move over to a 4 hour just to get a little bit better picture here. We are above our momentum zone on the daily, so that is nice to see. We are above the weekly 4 EMA, which is also nice to see. Once we captured that 4 EMA, right, we were able to push up to the 9 EMA. And that's pretty typical when you're using EMA theories, okay? And if I put on some targets here, remember I was saying that the levels that we wanted to beat, this box has actually moved for some reason. And I'm not sure why. It was supposed to be up here because it's supposed to be on top of that area. But well, maybe our lines kind of changed here. But anyway, just as a, I'll make some compromise from the old position. But anyway, the key area that I wanted to see us break out of was above this 19,700 area, and then to sit on top of 19,800. And as long as we can maintain this area, let's call it 19,900, just to split the difference and to work with our support areas here. As long as we can hold above 19,900, then I'm going to be bullish, guys. Okay, I just can't help it. Above 19,900, I'm bullish, and we just ripped through that. So I do expect some type of a check back, and I want to see that area hold. I want to see us hold this weekly 4. I don't want to see that violated. I don't want us to re-enter this, resistance zone. We have to hold 19,900 for me to accept this breakout as valid. Otherwise, I feel like we're going to start breaking some structure on the macro. And what I want to see is us to check back on this macro downtrend and then push back up to the weekly 9 and perhaps even get accepted by the weekly 9. And then I'm going to be extremely excited, guys, okay, for a possible uptrend. So you guys are not missing out on anything. Playing in this area is the right area to start thinking about playing when you get a little bit of a pullback and confirm support. It was not good to be playing down here when we were at resistance. Now people can say, but you're late. You're never going to enter the market if you don't enter the market right now. Like, yeah, BS, guys. Like, we just broke out. We're confirming the breakout, right? And so that's being a clever alpha monkey. I don't need to be a degenerate gambler, like right up against resistance, going all in, full bagging it, right? And trying to have bragging rights that I beat the breakout. No, I want to be taking profit at resistance. Like, you guys have got it backwards. You guys are ridiculous. Okay, you buy at support when you start seeing this type of a structure and these kind of higher lows, and you see your EMAs turning up. You buy at support and then you sell at resistance, and then if you break through that resistance and you get a confirmation of flipping that resistance into support, then you buy back in, okay, guys, after taking your profit first so that you paid yourself and not being a degenerate gambler who gets slapped down should the market go that way. Of course, the first target that I had here was 20,500. You guys know I've had that line on here for several episodes, and if this move had continued to go forward, that was my first target to look at. And boom, guys, like we nailed it. We got that target. If you were playing that, of course, I was not gambling in this market. I was waiting for the breakout and waiting for the pullback, as I believe that a clever trader should. If we go ahead and put on a a second trend here that a lot of people probably weren't even aware of because they're just not following that closely. We do have a months long second trend, and this is where the strong fake out could come in. Okay, this is where the market could be just a hoodwinking you, just pulling one over, and because they're counting on you to be thinking about this macro downtrend right here, and so they think, aha, if we break through that macro downtrend, everyone is going to get bullish, right? They're all going to go all in, all of these degenerate apes. They're just going to all ape in and FOMO into the pump. And then what can we do? We can activate this secondary resistance that we've built up here, and we can just slap them down and perhaps have a capitulation moment to the downside. And so this was another concern that I had, is that we had this months and months, right, like half a year long, secondary macro downtrend that was just hidden in plain sight. And so, since we have broken above my threshold for the the primary macro downtrend, the secondary macro downtrend is lo and behold, it's going to be right there at the weekly 9 EMA. Funny how that works, that this one was the 4 EMA on the weekly and that this is the 9 on the weekly. And if we conquer this secondary resistance zone, I've colored it blue just to distinguish it from the red here, but you could just consider this another red zone, okay, guys? Just wanted to show the contrast that there was the secondary resistance line. And so we really do have to push above this and hold not only on the breakout, right? If we go parabolic, it would be up here at 21,000. But if we go sideways a bit, like check back and then pop up, then it's going to be, of course, right here around 20,600-ish, and that would be a much more healthy move, by the way, to have a pullback, some sideways action, put in a little bit of support, and then getting on top of here and doing that again before potentially taking off, right, and just flying. But you can see that either way, whichever area we do end up breaking out of this secondary downtrend, it will be above that weekly 9, and that will suggest the possibility for a weekly squeeze play on something on the macro, which could bring us up to the weekly 21. And dare I tell you where that is? The weekly 21 is up here at 23,800. Now that'll probably continue to come down, so probably we could target something like 2300 if we get into this area and if it starts exploring those zones. Also on the daily, we have the 89 at 21,700. And so I would suggest that this is probably a significant, oops, that's not what I wanted to draw. This is probably a significant area to be thinking about as well for potential resistance. And so I'm just going to say that if we do have nice pumps on the chart, then this probably will come down a little bit. So 21,500, pretty much in line with these candles over here, kind of like this mid channel would be my first, uh, uh, like a breakout take profit on this secondary trend line. Of course, we're already meeting my take profit, which I had set for several days ago, guys, for this for this breakout. We've already met that. And then, of course, if we are able to maintain some bullishness, then, of course, I would be looking in this area first, and then just seeing how it goes, right? Seeing how it goes up there. Probably can bring that down just a bit, just because the EMA should be falling due to how low we are. All right, guys, in terms of, just kind of targets where I would be looking at, and by the way, what does that line up with the fib? Yeah, so that first take profit there above the secondary trend line or resistance would be around the 786, and so that would also be reasonable. Let's go ahead and just take a look at, let me clean this up just a bit. Let's see, where's that one? Targets, can put this stuff in targets. All right, now let's take a look at our momentum boxes here that we have, because the momentum boxes are pretty interesting in terms of, just giving us broad areas to think about. Even though we do have, turn this stuff off, sorry about that. Even though we have plenty of horizontals to look at, these horizontals are very significant to me, and I've decided I'm going to leave the previous boxes on, and I'm going to replace them with the new boxes just whenever I do updates, just so that we can see whether the conditions were met and how price action actually behaved on the boxes, the zones that I set out. Okay, and so guys, for the daily momentum box that I created for us, I said that we had to get on top of this 140-ish, right? And we didn't want to lose 19,000. We didn't. We hung on to that line in this candle right here, and we actually pushed up above my momentum box. And so basically from the bottom of this momentum box that I had marked out, right? Because I always use two of them. The light blue one is the daily, and then the white one is the suggested. It's just a hypothesis on the 2 to 5 day. Okay, it's sort of like trying to front run the 2 to 5 day move. And so for the daily, we had to get above that 19,600. And I said if we held that, we're going to have captured a bullish momentum. And sure enough, what happened, guys? What happened? We had a boom, a 4% move. So the Alpha Fam just killed that. We got on top of our momentum zone and boom, look at what happened. I'm not making this stuff up, guys. Like when I set out these zones, like it is really important to understand those key levels. And since we didn't violate, we didn't have any significant area of closure below this momentum area down here, which I suggest is the bottom of 19,000 for us, we actually ended up just firing off of it. We ended up recapturing our momentum to the upside on both of these candles. And of course, we are starting to meet some resistance from some other areas. You can see these wicks right here, right? So this is a resistance zone just on its own. And so what am I suggesting for today? First of all, congratulations, Alpha Fam. Our momentum zones worked there. Now we can replace them with new ones. And so the new momentum zones, right, are as such. And what you can first observe is that the momentum area the for the 2 to 5 day has actually come down pretty significantly, meaning that this move is likely to continue, okay? Because the tolerance that we have is much lower, and so we can have a pullback. And look at this, my momentum zone actually lines up with the naked candle, so we can have a pullback all the way back to 19,700, and we're still we still reasonably have a chance of pumping. Okay, that's also in line with that weekly 4 EMA. Now, for my purposes, I don't want to go below there. I'm going to be highly skeptical, and of course, that is because of our macro downtrend. And so, normally, I would give you these numbers of, let's say, 19,250. Let's just say 19,250. You don't want to lose 19,250, okay, guys? You don't want to lose 19,000. But if you want to have this breakout, stay alive, then we really can't break 19,000. 730-ish, 750. Let's call it 19,750, okay? And then if we're able to hold on the top of this box, then I don't care where we play in this blue box. We can wick down here. We can get wicks down there, but I want to see us close above this area in order to retain some bullishness. And then I think that we can continue on. So again, just to summarize, the key levels of support for Bitcoin is we definitely do not want to violate 19,000. We already know that. Really, we don't want to violate 19,250, okay? Um, in order to have a hope of continued macro bullishness, then I would suggest, or at least the potential for it, then I would suggest 19,750 is what we need to hold. And then if you want to just feel kind of bullish, right? For bullishness, then if we can get above this 20,350, that's what I would be looking for the key levels for Bitcoin. For Bitcoin CME, of course, this is a slightly different chart, and we do have, we do have just a very similar setup, but at the same time, this really has expanded the zone that we have here. Just trying to take a look at this. And so what I would say is that in order to really look bullish, we want to close the next day candle above 20,285, which we are losing right now, but we do have this entire area to play with. You can see, look at how we bounced off of this momentum box, right? So guys, again, like pay attention to these momentum boxes that I'm developing for you. Look at this powerful move right off of that momentum box. I mean, that's just brilliant, guys. I mean, it's just lovely to see this stuff working out how I intended. Of course, this is kind of an ugly presentation, but I'll try to figure something out in the future. But let's just remove that one. You can see we obviously held on to this one. And then for the daily, because this is such a wide zone, I really only need to be looking at the daily right now. And for the daily on the CME professional exchanges, really, if we just take a look at the macro trend line and also this box, there's this fuzzy area down here. So I would just say 19,500 is what we don't want to lose. And preferably, we would have some type of really nice bullishness if we could sit above that. Well, what number is this? 20,300. And our critical support is down here at 18,735. So to summarize the CME professional exchange, you absolutely, bottom line, don't want to lose 18,745. You really want to hang on to that 19,000, 500 to a 19,300 range, depending where you tag back on this, macro downtrend line. And then for bullishness, just to solidly be bullish, you want to be above 20,300. Guys, let's go ahead and jump over to Ethereum. Ethereum, same thing. You look at my momentum box here, and look at this. Pow! Right on top of that momentum box. Pow! We held it. Boom, guys. Boom, just boom. And congratulations to the Alpha fam on using that, the Alpha momentum box there for the daily. As you can see, obviously the 2 to 5 day, just front running just kind of the projection, right? Also held. Sometimes that one is higher than the daily, so I do like to include it. But if it's lower, then it's not that significant because it's just a projection. The daily box is more what can be confirmed by these daily closures. So let's go ahead and update our zones here. For Ethereum, you can see that the number to beat is going to be 1364 if you want that just really uber bullishness. And then let's go ahead and see these ones pretty much overlap here. So if you want a pretty moderate chance at bullishness, 1324 is really what you'd want to hold there. And once you get below 1300 and then definitely below 1275, you're just going to be looking kind of pathetic there, right? So guys, just to recap Ethereum, for our momentum to look strongly bullish, we want to be above 1365, and then we can kind of play in this area between 1322 to 1300, but hanging on to that would also look very good. And I'm going to be quite worried if we lose 1270. If we take a look at our momentum structure over here, that's pretty in line with our momentum structure, so I don't need to modify that. And then also, if we look at our weekly EMAs, then actually getting on top of this momentum box, you might think that this is aligned with this candle right here, but it does seem to be more aligned with that weekly 4 EMA. So that could be that potential squeeze up to 1438, perhaps 1420, somewhere in this area. The weekly 9 will probably continue to come down, so probably 1420. So really what we're looking for in terms of payoff is this kind of move right here, at least for a first target in terms of profit, assuming that we stay bullish. Other than that, I could suggest anywhere up into this area just to retest this breakdown. As you can see, Ethereum does have this kind of descending channel on it. And we did get, by the way, if you guys will recall, this Head and Shoulders had a measured move on it. Just darken that a bit so you can see it. This Head and Shoulders had a measured move for a breakdown, and that breakdown did suggest that we could go as low as 1,000 again. That's why I wasn't really ready to endorse Ethereum until I saw this broadening descending wedge, this inverted Head and Shoulders, which could suggest some play to the upside. And so Ethereum is hanging on mostly, I think, because of Bitcoin, but it does have this implied target down here. So if we do break down to 1,000, that's also just somewhere to be taking some interest in. But more or less, this inverted Head and Shoulders and this broadening descending wedge have interrupted this process. And so because this is such a big formation, it could take a couple weeks to play out. So I would still be open-minded to it. I'm never going to dismiss one of these really big structures that take multiple months to fill out until until we get kind of another low and a high that maybe disrupt it in some way, break something. Like if we broke the structure up here, then I would say this got invalidated. And also, this is not a very valid Head and Shoulders. I was mentioning that the right shoulder is taller than the left shoulder, and that tends to just weaken the pattern, and even it can invalidate it, guys, in some circumstances. So this measured move doesn't have to play out. It's just something that's slightly implied. And so again, like I'm just gonna leave it here to just pay attention to it. But right now, again, you guys understand, I'm targeting the upside as long as we maintain these bullish momentums, which again, just to summarize for Ethereum, we don't want to lose a critical low around 1275. We should be hanging on. I'll just take the average of this area around 1300, right? To 1320. That's going to give us a good chance if we don't violate that area. And then if you just want to be continue to be really bullish, then we really want to capture that 1360. Let's just call it 1365 area solidly, and then you could expect more upside, in my opinion. ETH, same thing. I mean, ETH CME. The professional exchanges is very similar to the setup, of course, on ETH, just a 24/7 exchange. But the professional exchanges do suggest that we are actually above our current momentum area that we need to hold on to. We are in danger of losing it, but the professional exchange does suggest that 1350, any closure above that would be solidly bullish. We do have this new zone that does suggest 1355 would be preferential for that forecasting of the 2-day to 5-day. But the area that we really don't want to lose for our momentum is going to be 1320, and then we're going to have lost all of our support somewhere around 1280 to 1260. So we definitely don't want to break anything down here. And just for a really solid chance, we want to be above 1323. And then if you want to be just really bullish and continue to be really bullish, then 1350 to 1355 is where you want to hang out at. Of course, we did get those momentum zones from yesterday, which of course I just leave there to show proof of the work that we're doing. And then this is our updated box now. So we'll check back in on those ones tomorrow to see if it was correct. If we ended up losing any of these areas, then it would imply downside. But if we end up holding on top of these areas, then it would imply up. Going over to stocks, actually on the stock market, you can see that we not only held that daily momentum zone that I suggested, which also had an implication for the 2 to 5 day underneath of it, right? Just a projection for the 2 to 5 day. And since the 2 to 5 day was underneath the daily, that meant getting on top of the daily would be even more bullish, right? Because it also has the backing of the 2 and 5 day. Like, you by default, you get the 2 to 5 day if you have this if you had this daily. And so that's sometimes it's on top and sometimes it's below. But when it's below, that suggests getting above that daily is going to be fairly powerful. And so what did we get? We got a nice solid 3 to 5% move here, having captured that daily momentum zone. So again, congratulations, Alpha Fam. Of course, this is where I suggested we were going to get that bounce, and I suggested that about a week ago, guys. So like, that was no joke. Like, this was a brilliant call over here, and I will pat myself on the back for that one because it did end up working out so well. And then up here, this is actually a zone that I would want to see us to recapture to continue bullishness. I made this zone when I made this zone, and look, it just it's expanding between both of them. And so, and then we're seeing a little bit of a hiccup here. So again, guys, like, boom and boom, like, we got it. Like, this was just brilliant. It was a great set of logic. It was a great set of technical analysis that got us here. And so, if you took that bounce, congratulations to you guys for making that determination. Let's see. In terms of these boxes, I can delete them now because we do have updates. Because of the powerfulness of this move, we do have to update our zone significantly. And it is pretty fat, guys. It is pretty fat because, of course, that move was just so, like, straight up. It looks like it looks like almost a line, right? It's just a straight up line that of course, these boxes are going to rise with it. One thing that you'll notice right away is that the 2 to 5 day has actually moved up significantly. It's no longer below the blue box, but it is, in fact, at the top of it. And so if we want to maintain that 2 to 5 day posture, because of the kind of parabolic action of this, there's a high likelihood of a retrace, right? Like, that's just how it works. When you just boom, right, straight up, oftentimes you have to check back. And so if we want to continue this to go forward, I really do think that we have to hold over 38.10, guys. And if we want to have a pretty good chance at being bullish, then we have to hold above 3804, which, by the way, we're losing this stuff. So actually, the skinniness of this one is telling me, yeah, we really need to hang on top of it, guys. I wouldn't trust it. I would say to continue bullishness, like we have to close the day above 3810, guys. That's by the way tomorrow. Okay, that's tomorrow's numbers because these are all fresh momentum zones. And then yeah, we could pull back as low as 3607, but I mean we're just going to continue to fall under 3810. We'll continue to fall. And as long as we can catch ourselves at 3607, then we're pretty okay. And then, but I would say that that's pretty much our critical support. I mean, really critical support is 3588-ish, but we don't want to lose this, right? Like this, it's just going to look bearish. It's going to look like we'd be continuing down to this zone down here, which is the more likely target in my mind. Like if we push up and then we come back down, that would there's some Elliott wave theory in there. I'm not going to get into that. For just for the key levels to watch, we don't want to break under 35.85. We don't want to break under 36.07. And really, to be bullish, guys, we want to be hanging above that 38.10. And I'm talking about daily closures, guys, closing tomorrow on top of those numbers. And then let's just zoom out really quick to get some context here. You can see that we do have this, this kind of like little uptrend here that we had broken down from. And so, what does this bounce really mean in the context of this overall bearish structure? It means that we could be coming back up to retest this, the breakdown of this diagonal trend. Do you see what I mean? Now we have a horizontal trend here, right here, where my green box is, and so we are retesting the horizontal one. If we break on top of it, I would expect us to retest all the way up to here, potentially. But that's a lot to ask for, so we're just going to play this by day. I mean, there's a good chance of a pullback, but we'll see, guys. You have the key levels to watch. Let's go to Nasdaq. That was the S&P 500. Let's go to Nasdaq, and very similar kind of a setup going on here, where yeah, I mean, we absolutely nailed it, guys, right? Like absolutely nailed it. Look at this projection that I had to the top of this dashed channel. Like we broke out of that. So this is not necessarily valid anymore. I'm gonna leave it here just to suggest the alternative, but obviously I'm gonna go by my momentum zones. I'm not gonna go just by some arrow that I think could go with some Elliott wave. I told you guys I'm not an Elliott wave trader. I don't care about Elliott waves. I think it's all kind of garbage, but I think that it is useful because the market does tend to move in those type of ways. It's not as predictable as many of those guys would have you believe. And normally, when you're watching them make those Elliott waves and things, they're always giving you like three options, and it's just kind of ridiculous because it's primarily fib based. So why don't you just use the fibs and support and resistance? I don't know, like just visualizing it. I think it's good for visual learners maybe and people who are just highly visual as opposed to using abstract numbers. Maybe that's what it is. But I do like it. I like it. It's just I'm not an Elliott wave trader myself. I'm just suggesting that as part of a wave to continuation to the downside, if we got rejected in this zone, kind of on this red line that I have here, then we could see continuation just based upon that kind of Elliott wave kind of thinking down to this area. But having already used this area as support. But if we're able to secure above that, then there could be continuation to the upside. So for our key levels to watch for Nasdaq, we absolutely killed it here. Boom, we absolutely killed it here. Boom, and then of course this is our updated zone. Again, it's going to be this huge. just because of how parabolic we went, okay? Like if we had chopped our way up there, this would be skinnier. But we just like went in basically a straight line, guys. So there's nothing that I can do. The area of ambiguity is extremely high, right? Like the area of confusion, the fog of war, right, is just really big when you have just a parabolic movement, because the uncertainty increases with the velocity of the movement. So, of course, baby steps are going to be very certain, but just jetting it, I mean, it's high uncertainty. So, but what can I say by using a projection of the 2 to a 5 day? What I can say is that if you want to retain bullishness, you need to be above 11,750 on the NQ1 Nasdaq mini futures, Nasdaq 100 mini futures. And so 11,650 is what I would look for there. If you just want something on the daily, then 11,628. If we held above that, I wouldn't dismiss that one. This is just a projection on the 2 to 5 day. And then for the blurriness of the day, you don't want to lose 11,088. Okay, you're going to be losing not only your daily stoke, but you're also going to be losing your RSI and just a whole bunch of things just will get broken. So you really don't want to lose 11,000 and let's just call it 90. And then obviously our critical support is down here at 11,970, pardon me, 10,978. So we can't lose 10,978. We would prefer to keep 11,090. And then if you just want to be uber bullish, then really we should close the candle above 11,630 and preferably above 11,650. Otherwise, there's a high likelihood that we're going to continue to fall just because some of these candles might get reclaimed, right? But if we can sit above, if we can close the day tomorrow above 11,650, then there's a good chance that we've held this level, we've flipped it into support, and that we could continue to rise. Now, just to zoom out on the Nasdaq there, you can see our channel. And so what would that look like? It would be actually busting back up into this area, which, by the way, this contrast with the S&P 500. The S&P 500, its line is way up here, okay? Like it has a ways to go to get back up into that area. But if you look at the Nasdaq, like we could literally just push up and like we're gonna be in that zone. And so that's interesting. It is a divergence between Nasdaq and S&P, just to think about, guys. Um, of course, we could consider perhaps this diagonal to be the correct analogy. Let me go ahead and choose a color there. And maybe that's the right analogy, and so maybe there is a secondary way to go. But the reason why this line is important on NASDAQ is because of some past support that we've gotten off of this one. You can see all of this on this diagonal. And so for the NASDAQ, I consider this a strong line. I consider this a line that we really do need to reclaim if we want any hopes for bullishness. And it could also have a high chance to reject. So getting that line is more important in my mind than getting this dashed line. So that's just my perspective. On the S&P 500, I don't think that we have something similar to that. Well, let me see if I can just tease something out. Yeah, I mean, I guess we kind of do. But it's just not as close. I mean, this could be a little bit off, maybe something like this. So, but you can see there's just not as much as with the Nasdaq in terms of important horizontal or diagonal. Well, let me see. Maybe I mean it's more of a zone, but there is something there, guys. There is something there. I can't deny it. There is something running through this area to the upside, which if we could flip it, and it's a zone, it's not a straight line. So just ignore that it's a line, that I drew a line. Just think of it as kind of a zone. There is this zone that if we do push up on the S&P and flip that, that could be as important as the one that we're seeing on Nasdaq from back here, which also has this kind of zone that kind of just runs up it, right? You can see that. Let me actually bring this one down. So we are operating within the zone on the Nasdaq. Yeah, this is just too, it's just too much. It's too big also. But that is interesting. Let me actually just explore this. I have no problem thinking outside of the box on these type of things. Let's see here. This looks okay. Obviously, we have some wicks below there, but capturing this, capturing most of this. And then this is more like a dotted line. It's more like a mid-channel. And so, yeah, I mean, if there is the potential to have some type of like behavior that just kind of goes along this thing, then it could run through like this. You see what I'm saying? And that could imply that this captured a bottom of this trend. Now, I know a lot of people hate when I do this kind of thing, but this is thinking out of the box here, guys. Yeah, I mean, we are getting back into this type of just trend, I would say, without having made a catastrophic dump. I mean, it's possible. It is possible, guys, that we just push through this stuff. So I don't want to dismiss the possibility that we could be doing something interesting here. Yeah, I'm glad I reviewed that. So just keep an open mind to that. However, we do just have to continue to play the actual levels. Wow, this is a lot of stuff. Let's see. We do have to just continue to play these momentum levels. So again, guys, like I want to see us above 38.10. Okay. Otherwise, I'm just gonna assume that we're gonna just check back. Okay. Like probably continue following somewhere within this blue box. There's no specific target. There's a lot of exposed candles here. This was basically straight up. If we look at the daily candle, I mean, look, like that was just two candles that are straight up. You know, there's a good chance that this candle is going to get reclaimed, right? Retested, and then perhaps continuation or continuation to the downside. And that would be actually, interestingly, right in the middle of my momentum zone. So, like for the daily momentum zone, like we could see any type of price action moving down here, but at the end of the day, tomorrow, I want to see us above close above 38.10. Otherwise, I'm going to be we're going to have momentum to the upside still, but I'm just going to be a little concerned that we have an increased chance to break down further. Okay, so again, like the bottom line for that is a 3607 on this S&P 500, and then for Nasdaq, very similar thing. Let me recolor this box. I don't have to explain to you because I just explained everything on the S&P. And so for the Nasdaq, I want to see us above 11,650. Definitely want to see us above 11,630. Getting a little concerned if we lose 11,089. And then bottom line, 10,980. That's for the Nasdaq. And Q1, NAS100 mini futures. Guys, a lot of these coins popped off. XRP did a good job, but other ones are just kind of playing with their support lines. ZIL, ADA, you can see they're all breaking out of these wedge formations. Cadena, CRV, Flux, all looking very weak, and that's because Bitcoin dominance should probably be rising. Yeah, Bitcoin dominance has just been going up. And remember, I said that there was like a quadruple head and shoulders here, like some type of weird head and shoulders. Well, the measured move for that's going to be all the way up to here, and we're not there yet. So hopefully this bearish divergence here plays out to the downside. Otherwise, altcoins are going to continue to be weak as Bitcoin dominance pushes up. Especially if we start getting above some of these critical levels. So I'm kind of tired today. This was a longer than average episode. Just really trying to think about things because we did have that breakout on the Bitcoin chart. And just wanted to really think very thoroughly about what could potentially happen. And yeah, I think that's it, guys. DXY, still struggling with this area right here. Not sure if it's going to pop up or not. But hopefully we get a little bit of retracement. If we get a little bit of a retracement and we still hold the breakout of Bitcoin, right? We don't break under that yellow line. We hold that yellow line. Then I'm still going to feel pretty good about this market right now in terms of that breakout and the possibility for a continuation to the upside. So watch this space. That was your alpha for the day. Stay safe and happy trading.